Do you have a job in accounting? Are you looking? Whether you're starting from ground zero in university or are crushing it with your full-time career, The Bean Counter is the show for you. Here's your host, Andrew Argue.
Good morning, everyone. This is your host, Andrew Argue, and you're listening today to the Bean Counter podcast. Well, we've got this podcast today on Friday, October 25th, I think it is. October 25th, yes. It's Friday, and we are rounding out the week. I had a really exciting week on the podcast. We released some really cool episodes. We had Phil Anthony on the show with CPA Excel talking about the CPA exam requirements, which is a question a lot of people have had out there. And then we had Tim Ryan from PwC. I mean, whenever you don't work at a company, you don't know how high up some of the people are. So, for example, I never worked at E&Y. So if someone said, oh, this guy works at E&Y, how high up he is at the company, I probably would have no idea because I worked at PwC. I never worked at E&Y. But just to give you some background, I mean, there's something at PwC called a, quote, leadership team. And Tim Ryan, the guy we had on the podcast earlier this week, was on that leadership team. He's one of the top, I don't know, that top 5 people in all of PwC US. I mean, he is up there. So the fact that we were able to have him on the show, I would say was a huge win for the Bean Counter. Hopefully that will get some other people out there who would be great to have their stories on the program for you to have a listen. It'll give them a little bit more comfort coming on the show. Certainly got me excited that, wow, we're able to get this guy on the show and, we're just some little blog on the corner of the internet. How awesome is that? So thank you all so much for your support. I mean, I think, the word of mouth has really gotten around about the Bean Counter really well. I was speaking to someone the other day about the show and having somebody on. He said, I was listening to one of your podcasts this morning and I had someone come in, the VP of Business Development, and they said, what are you doing? Are you listening to CPE credits? And the person that I was speaking with said, no, I'm listening to the Bean Counter podcast, and this VP of Business Development at this company that I'd never even been to or never even talked to the people that work there was like, oh, I heard of that. I heard it's pretty good. And, I mean, that kind of stuff is awesome, right? I mean, whether you're out there talking about it to your friends or, you've been kind enough to share the links or, you're reading the newsletter, whatever it is, I mean, thank you so much for getting the word out there. We've been able to get a good word-of-mouth brand even in just a couple of weeks. So today I wanted to spend a little bit of time talking about accounting lingo. Now, I got this topic because I was sort of thinking, what are some good topics for the show? What were some of the things that I went through? And I remember, I had some trouble when, I think more so when I was an intern, but if you never did an internship when you started full-time, just getting up to speed on some of the terms. Now, every company has their own set of terms, which are like acronyms or whatnot, and a lot of times those companies are kind enough to give you those terms. And so if you're starting at, some company out there, let's say it's BDO, for example. BDO is going to have all their terms. And then the real headache about it is whenever you go out to all of the different clients, whether that be audit or tax or advisory, whatever the case may be, your clients are going to have different terms. And if you're on different clients all the time, they're going to all have different terms. So, it's not like when you're in university, there's not really the same number of acronyms that you're going to run into when you're in accounting. It's sort of a big headache. So I wanted to get a podcast out there that had some of the basic terms that, for someone who's already working in accounting, be like, yeah, I know what this stands for, duh. But I literally remember when I didn't know. I remember when I had to learn this, and there was a period of time where I looked like an idiot and didn't feel comfortable bringing it up because I didn't understand what it was, but didn't want to seem like I was stupid because they were assuming like I should already know this. So I wanted to get it out there for any one of you that's getting ready to go into an internship or a full-time job in the next 6 months or a year or any time in the future and wants to get a little bit of a better understanding of some of the key terms. So with that being said, let's get right into it. Now, I know some of these are going to be basic, but there are people out there that just don't know these things. So the first one I want to talk about, and you can check out all of these in the show notes before we get started. So I'll have, the actual term in the show notes and then, a sentence or two describing what that means relative to the accounting industry. So let's get into it. The first one I want to mention is busy season. What is busy season? Busy season is a term that describes a 3-month period related to the client's year end where you're working, a lot of hours. But when you actually work in public accounting in particular, a lot of people will tell you that busy season never really does end You just keep going busy for most of the year, at least for a lot of people that ends up being the case. But busy season is traditionally referring to January, February, March, April timeframe. A lot of those audit deadlines for the financial statements to go out for SEC reporting requirements, a lot of those tax deadlines for corporations and individuals are also during that time period. And that's where really the bulk of the work takes place. I always found that that was the most exciting time of the year. I mean, yeah, you're working the most, but that's where you really learn everything. That's where you get to see all the clients' issues. That's where you really get to dig into the details. You get pretty much whatever you want when you ask for it, whereas the rest of the year, everyone's sort of just dragging their feet waiting for busy season to occur. It's an exciting time of the year, and it's the most busy time of the year. So a lot of you out there are thinking about doing internships. You know, I would recommend, if you can, do an internship during busy season. Don't wait and try and do one in the summer. I did one in the summer. You make more money if you do it during, quote, busy season because you work longer hours. And you also get more of a real experience. Working in the summer, it's a little bit lighter of a workload, and it's not as difficult to work. The second one is, quote, what's on your plate? I mean, everyone could sort of infer what this means, but it's one of those terms out there that everybody just sort of asks all the time. You know, hey, what's on your plate? You know, there's a great video out there of a guy who sort of goes through these accounting acronyms, and he doesn't do it in the sense of, oh, I'm going to list out these accounting acronyms, but he sort of shows you a day in the life of working at one of these companies, and that one is specifically for public accounting, and I just love it in there. One of those things that someone was about to pack up their bag. It was the end of the day. He's like, all right, I think I'm going to head out. They close their computer, and he sort of interrupts them and says, oh, you're getting ready to leave? Okay, well, let's do a status update. So what's on your plate right now? And I just thought that was hysterical because it's sort of one of those, you know, token inconsiderate things that someone would do to you as soon as you've been there for 10 hours, and then as soon as you're about to leave, you know, that's when they need the status update to figure out what's on your plate. I thought that was quite funny. The next one is, quote, FP&A. I didn't know what this one was forever. I mean, so many companies don't have a, quote, FP&A department, but FP&A stands for financial planning and analysis. Typically, these are people at the company that do the budgeting and the forecasting. You know, it matters a lot when you have to buy a lot of products that have to be used in the materials component of your sales product. So, for example, if you sell, you know, cars, you really have to know how many cars you're going to sell, or at least get close, so that way you know how many wheels to buy and how many, you know, seat covers to buy, or whatever the heck else you buy, of all the steel that goes into these cars. You have to have a good financial planning and analysis department. So if someone ever brings up, you know, oh, speak to so-and-so in FP&A, that's what that person's doing. Some type of financial planning and analysis, budgeting, forecasting, that type of stuff. The next one is, quote, non-traditional hire or non-traditional person. So the traditional track, and I think next week we're going to have a podcast on the hiring process for accountants. And the typical hiring process is, I mean, most people in accounting who are looking at it as a career and looking at it in the long term, and if you're listening to this podcast, you probably are thinking of accounting of, you know, you get your university degree, and for a lot of you out there, you get a CPA, maybe you get a CISA, maybe you get a CIA or another certification out there, CFE, whatever you're interested in. And you go on and work your job. And that would be after about a 4-year university degree. Maybe you get a master's. If not, you get a 5th year to fulfill some of the requirements for those licenses. And then you go ahead and you work. Well, for some people that go through the system that don't go on that normal track, they're considered non-traditional. An example of someone who's non-traditional is someone who's already worked in another career. Let's say somebody went out of university and, you know, they were 19 years old or 18 years old, out of high school, and they were 18 years old, 19 years old, and they just started selling cars, and they did that for 6-7 years. And then they went back to school, got their degree, and finished their degree when they were 31 or 32, and now want to work in accounting. Well, that's someone they would consider sort of a non-traditional student or a non-traditional hire. Also, there are people who, and I think this is another one of the terms on here, experienced hire. Yeah, we'll get to that in a second. But that is people who were working at another company for a number of years and then were hired into the track. You know, accounting is such a train track of an industry. You know, you're supposed to get on these train tracks and go on this path. And if you come in from another angle, then people call you, quote, non-traditional. So that's something to be aware of. Campus or college hire. I mean, this is pretty obvious. This is what a lot of people who are listening to this podcast are. You're going to be the ones coming in, looking for that summer leadership conference, looking for that internship, looking for that full-time position, typically in your early 20s, early to mid-20s. That's for what the normal track for going into these jobs is going to be. The next one on here is, quote, charge code. When you work at a lot of these companies, if you're in public accounting, you have a code that you bill all of your hours to. So if I work on, XYZ client, XYZ's client is code 12345, and I bill all my hours to the code 12345, and I also bill all my expenses to that. And that's how they sort of track the amount of money that they're making and the amount of costs that are associated with it and the billings that they're doing and all that kind of stuff. So that's the, quote, charge code. Now, there's a term out there that I sort of always loved, and it was called, to quote, hit the code. So if somebody ever says, oh yeah, just hit the code, what that means is just put it on the code. Expense it to the code. So if you're going out, you're buying your dinner, and someone's like, oh, I'm just going to hit the code, or you should hit the code, or whatever the case may be, that means drop that money on the code, if directed to do so. So if someone says charge code or hit the code, you're going to know what they're talking about. The next one is, quote, circle back. I didn't know what this one was. I mean, it's so simple now to think about it, but for some reason I just didn't get it when I first started hearing it, and I was like, what the heck is this talking about? Circle back basically means let's talk about this later. And, a lot of people joke out there that people say this, oh, you know what, let's actually circle back on that. And the sort of joke in the industry is that anyone that sort of says that on a consistent basis is really just saying, I have no idea what you're talking about. Let me go Google it, and then we can talk about it in an hour. So I'm not saying that that's true for everyone. I've certainly used the term circle back, maybe when I knew what I was talking about, maybe when I didn't. I guess we'll have to, it will forever be a mystery, but that is another term that is out there. The next one is, quote, clearing comments. We've talked about this briefly on the show before, I believe. I don't remember what podcast this was a part of, but the idea that when you prepare a lot of work, and this is if you're doing internal audit as well at a company. This is not just related to public accounting. There are also some people at companies that work on projects and get comments like this on the work that they've done, and then you have to go in and, quote, clear them. And clearing comments is really just addressing those comments with responses and making sure that you've addressed any of the issues that were in the work that you performed. So that would be clearing comments. The next one is crossfoot and foot. It's sort of astounding that someone can go through university and still have such a small or limited knowledge of Excel. I guess, it doesn't surprise me that much because I feel like I didn't learn anything in university. I mean, I pretty much just got the piece of paper, and then I started learning from that point. And any of the learning I did when I was in university that wasn't involved in my social life was related to extracurricular activities I was in, or really mainly the internet. But, for when you're in the classes, you would think people would get, Excel training or courses or whatnot, but they really don't do anything that actually adds any value anymore, at least in my opinion. I'm sorry if you're offended by that. But, and so when you come in, you don't know a lot of the Excel skills, and it's sort of amazing how many people don't know what crossfoot or foot means. And basically, crossfooting is, let's say in Excel you have a series of numbers that are going from left to right. Crossfooting that would be just totaling all of those together, let's say on the right-hand side, and making sure that all of those equal the total. So if I have a number 1, 1, 1, 1, that totals to 4, and on the right-hand side there's a little cell there that has a 4, making sure that doesn't say 3 or 5 or 25 or something like that, that it says 4. That would be cross-footing all of those rows. Footing would be pretty much the same thing, but for the column. So if I have, a column that goes up into 1, 1, 1, 1, 1, 1, I think that was 5 ones, that it totals with a 5 at the bottom, and that 5 doesn't say 6 or 7 or 8 or 9. That's important just for spreadsheet integrity. I mean, you pretty much have to do that on every single thing you work on, regardless of what industry you're in: financial reporting, staff accountant, internal audit. Those are terms you're going to run into. CYA, cover your ass. This is a term that's used in terms of performing the work in a manner in which you won't get in trouble, whether that be from your supervisor, the client, the PCAOB, lawyers down the road, if the audit was ever brought into some sort of litigation. CYA, cover your ass, and you're not going to know how to do any sort of CYA procedures. And most of the time, the CYA procedures is, embellishing or documenting things, not lying about what you did, but just making sure that every single thing you did in the spirit of what was supposed to be done was done, and making sure that that's all documented in the work. Making sure that every little tiny thing that you did to get comfortable with this, even if it's very high level, was there, just so someone can say, well, you didn't do this, this, and this. Be like, yeah, but I did all these other high level things, and I was really comfortable at the end of the day. That's sort of the CYA procedures that most people do. That, or they just don't know how to do the actual work, and so they just are like, well, I don't know how to do the work, so let's just do 10 things that are sort of related and, cross our fingers and hope for the best. When you work for people like that, it could be a real nightmare and a real headache because they're just too scared. I mean, that is one of the things you'll learn about the accounting industry, and it's really sort of a tragedy, is that a lot of people are afraid to prepare things. A lot of people are afraid to pull a trigger on something, and they want to do CYA procedures or get someone else to say that it's good rather than just standing behind it themselves, and that can be a real headache. The next one is something that is so simple, but I remember when I was an intern, my first week, people kept saying this term, and I was baffled. I was lost. I had no clue what they were talking about, and I didn't even know how to spell it. And the term is P&L. And I was thinking, and I even saw it in a spreadsheet, and I saw it said P&L. And I was like, what the hell? What is this? What is this? And I mean, this just goes to show you how big the learning curve is now, because it's sort of hilarious to me. But I was sitting there looking at a P&L in a spreadsheet, and I saw how it was spelled, and I didn't know what it was. P&L stands for profit and loss. Basically, it's an income statement. But people were saying, oh, yeah, Andrew, open up the P&L, blah, blah, blah. And I was like, what the heck is going on? I have no clue what this is. And the reason it can get kind of confusing, too, is because people will put P and sign L, or they will put P, the letter N, as in Nancy, L. And then you're like, you might not know what P and L means, and it's not spelled like P and L, but there's no apostrophe that indicates that N stands for and you're like, what the heck is this? Anyway, just to save you the headache, P and L, if anyone ever refers to that, basically just means the income statement. So, keep your eyes out for that. Another term is the term eating hours. So, like we sort of talked about before, there's the idea of a charge code where you book all the work that you do for a specific client. And there's a term out there called eating hours, which means that, when you bill the client, you bill them based off the hours you work. So let's say in 1 week, you worked a lot of hours, you worked 60 hours. And that means that those 60 hours will get billed to the client. It doesn't work exactly like that, but we don't need to go into the details. So those 60 hours, you're going to bill to the client, let's say. But, there's a lot of pressures on the budget. The client's really upset. So, you know what, guys, let's just make sure, even though we're working 60 hours, everybody book 40 hours. And that would be the term eating hours. Now, that causes a lot of problems for people, because then when you come back on the job next year, everyone's like, oh, well, this only took us 40 hours. And you're like, no, that took me 60 hours. And they're like, well, you wrote last year that it took you 40 hours. And so it sort of gets you in a big headache, because you can't actually do anything in terms of changing the work year over year. You can't make it better or more efficient and justify why you need more resources or why it's going to take more time, and it really puts you in a big bind. And honestly, what ends up happening if you do something like eating hours is you just end up working nights and weekends, not seeing your family, not having a personal life, and not getting any credit for it, because nobody knows that you're doing that. And if they find out you're doing that, a lot of times you can get in trouble, or at least it's very frowned upon. The next term I have is experienced hire. We already talked about this, but more specifically, just to get into it for a second, these are people that are already working. So before we talked about non-traditional people, that can be referred to someone who's already been working, or someone who went back to university and is starting entry level at an accounting firm. An experienced hire is someone who is working at another company. It could be at another accounting firm. It could be at an internal audit position or whatnot. A lot of companies hire people from PwC or KPMG, and they're experienced hires. They don't really refer to them as that, but they just hire them because those are people that have experience, and they're hiring them as an experienced individual. But if you're working at BDO, as the example we were using earlier, and BDO hires someone from Grant Thornton, and that person's been working at Grant Thornton for 3 years, that would be an experienced hire. If BDO hired someone that's been working at XYZ company out there and they've been working at that company for 2 years, that would also be an experienced hire. So it's someone that's coming into the company that's not straight out of high school. They've been working for college, been working for a few years. The next term on here is main client. A lot of people, and this really varies. I mean, I know some people that work at some of the mid-level firms, the national firms that aren't Big Four. They don't really have a, quote, main client. When you work at a company that's national or regional or local, I mean, you might have 50 clients. I mean, you might be on a different client almost every week. But if you do work in one of the larger firms, usually you have what's called a main client, which is the client where you spend most of the time on your year, most of your work. It might account, I mean, in some cases, it might account for literally all 12 months of your year. In a lot of cases, though, it'll be 4, 5, 6, 7, 8 months. It just really depends. The next term we sort of talked about a little bit already, the on your plate. We've covered that one in detail, I think. The next one here is period end. That refers to the end of the fiscal year that the accounting project is related to. So, for example, period end for most companies is 12/31, December 31st. That's typically when period ends are, but a lot of companies do the end of November. A lot of companies do 9/30s, 6/30s. Some companies do 3/31s. It really depends on the industry. Healthcare has a lot of 3/31 or 9/30s and 6/30s. I think the football teams have like 3/31s because the Super Bowl and whatnot. So it really depends on the industry, but period end that's what they're talking about when they bring that up. The next one on here is sign off. That would be, when you're working at any company. It could be one of these public accounting firms, or it could be an internal audit or a financial accountant. One of the things in accounting that's really big is something that's called review and supervision. The work was performed, and then someone with the adequate knowledge and experience and technical expertise supervised you in performing that work and reviewed that work after the fact. And that is just something that everybody talks about in the industry in terms of making sure that things are done correctly and that there's quality in the work that you do. And when I say quality in the work that you do, that's a really vague term and sort of annoying. But basically what it means is it right or is it wrong? If it's right, okay, we're good. If it's wrong, then it's a low quality. Sign off is getting that person above you to supervise and review it. And when we say sign off, we mean actually approving it, saying, yes, this was good. Now, people like to actually sign things off. It doesn't have to be that way. It could be sort of an email approval or something like that. It can't even be verbal. But if you're actually preparing something, which a lot of you out there who are listening to this will be in your first couple years, get someone's physical sign off just to CYA, to go back to another lingo term. The next one on here is touch base. That's where, if someone says, let's touch base at a later date, everyone kind of knows that, right? I think people use that in everyday knowledge and everyday conversation, but that just means, hey, let's get in touch at a later time. This is also something, again, that goes back to what I was mentioning earlier. This can be a good cop-out for someone that doesn't know what they're talking about. I think we mentioned earlier, let's circle back, while the other one is, let's touch base tomorrow because I don't know what I'm talking about. Tomorrow, after I've Googled it, we can figure it out. The next one on here is work papers. Work papers are it's sort of like what it sounds. It's where all of your work is contained. It's where all the evidence that you've documented for the procedures that you performed are. Typically, your work papers are contained in a database or a work paper file, which is basically just some sort of application in a computer that houses all of the files related to the audit. They're generally organized by the components of the different stages of the audits or the different stages of the tax work or the internal audit work if you're doing that kind of thing. And, they are stored there. They can also be stored on something like an FTP site. That would be the case for someone who works at a company. They don't typically refer to them as work papers, but it's essentially the same thing. It's really just a listing of all the documents that you've done related to a certain task or procedures. Those are your work papers. The next term on here is, quote, at the end of the day. A lot of people say that, and I always sort of loved it. It's sort of just meant to summarize what's going on. At the end of the day, this podcast was probably longer than it needed to be. And at the end of the day, we probably got into too many examples. And at the end of the day, everyone on here already knew what the heck we were talking about. That would be how you might, unfortunately, summarize a podcast like this. The next one on here is replication. I think I talked about this one before, but when you have these different databases and you work at a company like BDO, we're going with the BDO example today, everybody has a database. And let's say you're working with Sally, and my name's Andrew, right? So Sally and Andrew are working together, and Sally prepares something in the database. She then replicates that database with a server copy, which is sort of out there in the land of BDO, and then I replicate my database with the server copy that's out there in the land of BDO, and then I can see what Sally's done. And vice versa. All the work that I've prepared, when I replicate, Sally then replicates. She can see all the work that I've done. And it's a great way to sort of share documents and share work. When you're first starting out, if you want a real pro tip here, it's just so basic for anyone that's been working there, but you just don't know these things. When you're an intern or when you're a first year, if you tell someone, oh yeah, I finished that, what else do you have on my plate? The first thing those people will ask you is, did you replicate? Because what they want to do is they want to go in and see it. But if you say, oh no, let me replicate, then you have to go back to your computer, you have to replicate, then you have to tell them again that you replicated, then they have to replicate, then they can look at it. Whereas if you say, yeah, I replicated, then they're like, okay, cool. They replicate, then they look at it. And it's just a little quick tip that a lot of people will give you a lot of credit for if you're able to do that without even being told. So I hope that you've enjoyed this. I hope that this makes some sense. I've hopefully added some color to some terms out there. If anybody has any questions, if there's a term out there, shoot me a quick note. If someone said it, I could probably help you out with it. There are a lot more than this out there. And like I said, they get very specific in the different companies that you work for and in all the different clients that you may serve. So good luck. Don't be afraid to ask. I don't think there's anything wrong with asking, but the really important thing to remember is try to ask immediately rather than waiting, because the longer you wait, the more awkward it gets. If it's week 3 and you still haven't asked what the P&L is and you also haven't done the work related to it because you can't comprehend what it is, that's sort of a bad place to be rather than asking on day 1. So thank you so much for listening. Have a great weekend. I appreciate, like I said, again, all your support. I've really enjoyed working this week on TBC. I think it's really turned out great. We have a very special guest coming on the show next week, someone that is a huge name in the industry. When he goes to conferences, I've been told that people go up to him and ask for his autographs. Now, unfortunately, when you find out who the person is, that might be quite a sad thing, but I'll leave that up to you to decide. But thank you so much for tuning in. Shoot me an email if you have any questions at andrew@thebeancounter.org. I look forward to speaking with you soon.